Let's talk more about Google, the Magnificent Seven, the AI idea here. Let's bring in Lou Basenese, who's Public Ventures President and Chief Market Strategist. So you just heard what we were talking about here, about sort of where we are in this opportunity. And it feels very sort of fits and starts still.
Agreed.
So how should investors be thinking
We should be able to just put it into ChatGPT and get the answers, right? I mean, that would be just that simple. But
well, except ChatGPT makes some mistakes, which is sort of the whole problem.
And I think that's what last year was the year of Nvidia and like the launch of the big AI wave. And this year's got to be about first derivative opportunities. Where are the tools and applications where AI really changes things for business, for consumers, in the medical field? And I think you're just starting to see some of those applications come out. From the software side, I agree that you have to play a basket. You're not going to be able to pick a single horse in this AI race and work out as well as it did for Nvidia last year. I mean, let's just face it. Nvidia can't have the same run this year as it did last year. It just would become too big of a company. I love Microsoft. Personal disclosures, I don't have any. We don't do any investment banking with them. But what I love about Microsoft is they can drive AI adoption by pushing it down into their products. Whereas Nvidia is really looking to get pulled into the market by people that are developing applications that need their chip. So I think they have a little bit more leverage there than most players would give them credit for.
We actually just had Dan Ives on Wedbush on the show, who his survey work was talking about, very bullish on Microsoft too, was kind of talking about, at least his checks indicate more adoption of Copilot there. What about Apple, by the way? We were just kind of talking about it. I mean, it's down about 12% this year. And you can understand the sentiment there, Lou, because it's questions about the AI strategy, it's China, it's being targeted by regulators on both sides of the Atlantic. But what are your thoughts on that?
Yeah, I mean, look, I'm an unabashed Apple fanboy, have been for a long time, but you probably remember too, we go through these waves of sentiment changes, and usually the bear sentiment peaks during this time of the year. It's just the next iPhone upgrade cycle is not going to be as strong, average selling prices aren't, and then we get a surprise, right? Services revenue boost a lot higher than we expected. Their installed base is bigger.
How many times have you heard the death knell for Apple?
Oh, I mean, all the time, right? It's innovate or die, and I've always said it's just iterate and thrive, because they have such a big installed base that if they have incremental improvements to margin, to product offerings, it really adds up to the bottom line, because they're always buying back shares and boost the profitability. So look, I'm always the contrarian. If we had the yearbook adage there, I would be the most likely to be contrarian. I like Apple when everyone else hates Apple, and I don't think it's anywhere close to being rotten right now.
Okay, so let's ask then about Alphabet and the sort of mixed sentiment that we have seen over their launch of their AI products. I mean, there have been a lot of questions, and that's been very volatile also.
And I think if you look at them in cloud services, right, they're the third horse in the race, right? They had great growth last quarter, about 26% growth for their cloud services. But there's only about $9 billion, which puts them 2.5 times behind Microsoft and well behind Amazon. But I do like Alphabet because they're really an economy play, an advertising economy play. And if we look at the underlying strength in the economy, it's really good. So that should boost their ad business, which I think if you look at the valuation, Alphabet's selling at the cheapest valuation out of the Magnificent Seven. I mean, about 22 times forward earnings. That's, if you want to, I think earlier in the show you're talking about valuations getting stretched with the previous guest in the tech space in particular. This is the undervalued name in tech for sure. I won't go near Tesla. I don't. Yeah.
Why you wouldn't go near Tesla?
No, I just think it's too volatile, and I think Elon Musk has always been a great promoter and visionary to say, here's what's next. I don't know what's next right now, right? The AI
he himself has said we're between growth waves.
Yes,
is what he
and I think
put
that's accurate, right? You get credit and the most valuation on the early phases of that growth wave. It's the S-curve of innovation, and they're looking for that next jump.
You don't think, Lou, though, I mean, the way the stock has been hammered this year, you don't think all the bad news is priced in?
I think no, because I think the bad news is more to come, not just for Tesla, but for the whole EV industry. I think there's just a reckoning of the economics, and I think investors are trying to figure out where does that sort out.
All right. Lou, thanks for your time today.
Thank you.
Appreciate it.